three ways that you can handle those types of situations. The first is to ask the seller to finance the property for you, saying, "Hey, Mr. Seller, I understand you want $1 million for your property, but based on what your tax returns are showing, I can only pay you $500,000. That's what the bank will allow me to buy it at. So we're at an impasse here, unless you are willing to be the bank for 2 to 3 years for me as the seller financer, and that way I can properly show the income that this property is producing on a couple tax returns. And once I'm at 2 to 3 years worth of showing the proper income, then I could refinance you out with the bank." So that's option number one. Typically it goes 50-50. If the seller needs the cash immediately, they usually won't go for that type of strategy. But if they still like to receive passive income or residual income by getting those interest payments, and they don't need all the cash right now, then we'll structure something like 15% down or 25% down. You carry the mortgage for us for 3 years, and we'll have an amortization schedule over 25 or 30 years. And I like seller finance deals because you can dictate all the terms. Usually when you go with a bank, there's very little you can really negotiate on because of the golden rule. The golden rule is he who has the gold makes the rules. So I do like seller financing. Now, if the seller's unwilling to do that, another option you can do is go with an asset-based lender, or a hard money lender, as they're called colloquially. The hard money lenders, they're going to look at the asset value, and they're going to lend up to a certain amount of that value.